Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video we're going to be taking a look at the US dollar index. We're going to have a little look as price is approaching a major swing level. So is the dollar going to remain strong, or is it going to start to reverse potentially that strength? Now, I think in the short term, or the near term at least, we should still see that dollar strengthen slightly. However, if price starts to break above this 94.60 area or get towards $95, I think that we may start to see a little bit more selling coming into the market. Now, the reason why I think that is because if we go take a quick look at this seasonal chart, what we can see from the US dollar is that usually it finds a little bit of sort of consolidation throughout October, and then a top through sort of mid-November before we see a move to the downside. So essentially what this is telling me is that maybe there's still that little bit more upside in the short term, but in the long term we could see a top through November and a move down. Now, what's interesting recently is if we have a little look at some commitment of trader data, we can see that the commercials are adding some significant short positions on the US dollar at the moment. So they're increasing these positions in these sorts of levels, which suggests that they are happy to sell in and around these prices. They are also adding long positions, which is something that we wouldn't want to see if we wanted to be short immediately. We want to be seeing that they are decreasing the long positions and increasing short positions. At the moment they are doing both, so that just shows us that they're hedging these positions, but they are favoring short positions overall. If we go all the way down into those positions, just from a sort of visual representative here, we can see here that I have the commercial data and the short positions. Now we can see that price is just closing in on these extremes just through there. Now this is where I would want to see these short contracts get into before seeing those sort of turnarounds in the market. Okay, so you can see here that when the price got to, or when the chart got to these sorts of areas, price dropped. That's what I'm going to be looking for. Again, we're not quite there yet, so as I said, it shows us that maybe in the short term we're still going to get that dollar strength until we get into these sorts of areas with the long contracts, or the short contracts I should say, before a move and a decline and a move in the dollar index. So that's what I'm looking for here. I'm looking for these contracts to rally a little bit higher. Once they get into these areas, it shows us that there may be a potential for the dollar to start moving to the downside. Now if we look at this from a technical point of view, now we can see we're approaching this major swing level. Now what that may look like is a couple of weeks of consolidation. Maybe we'll break through this level at first, maybe form sort of a sort of consolidation candlestick or a couple of them, before then seeing a move down, perhaps back into the previous swing highs or even lower to the swing lows down here around about $92. But let's have a look at this from a daily perspective, because at the moment it's kind of showing a little bit more of a bullish side to the market. We are creating a consolidation pattern with higher lows into a resistance zone. So this is what I mean by what we could see in the short term. We could see price continue to break to the upside, basically suggests that the trend is going to continue, and then price could then fall back within below this 94.60 for a move down. That's what I'm kind of looking for here on the US dollar index. Now if we look at the 4-hour time frame, we can see that this trend is still to the upside, like we've explained in previous videos. So until anything really changes here, we have to remain with our bullish bias in this near term. However, if we do start to see price take out lows, that's going to be a strong signal that price is going to start to move to the downside. So I'd say the strong indication that when that would happen would be a break of these lows here, which would be around about 93.60. So if we were to start seeing price trade below that 93.60 level, that would be opportunities to start looking for those short positions on the US dollar in the near term, stay bullish, stay long until anything significantly changes, but we should see potential break of 94.60 before seeing those short contracts increase. So I hope you enjoyed this video. If you did, leave it a thumbs up, subscribe to the YouTube channel to see some more of our Forex content, and I'll speak to you in the next video.